All right, folks, welcome back to the Nadlin Forum Podcast Daily. Ruby here as always, and Lior's joining me. Lior, how's it going?
Hey, Ruby, I'm good. It's a little less chaotic than the market right now, which is honestly nice for a change.
Yeah, well, that's a low bar, mate. Seriously, though, the big headline this August is sellers are really holding back. I was reading through Zillow's report. Turns out we've hit a record low for new listings this month. Homeowners just aren't keen to sell anymore. Lior, it feels like every seller I talk to has the same complaint. Why give up my low mortgage when nobody wants to pay these prices?
Yeah, exactly. What we're seeing is this affordability crisis holding people in place. If you already locked in a super low rate, selling and then buying somewhere else just doesn't make financial sense, especially with prices and mortgage payments where they are. The market heat index from Zillow, it shows there's way less competition among buyers than usual for August too. Everyone's kind of pulled back.
And it's not just the sellers, right? Demand's pretty sluggish, especially for folks at the lower end of the income scale. When I was in New York last month, I met this Aussie couple. True story. They'd been planning to list their little co-op in Brooklyn, but they pulled back. The wife goes, "No one's biting at these prices, mate. We'll wait it out."
Yeah, totally. And it's showing up in the numbers. National home values have basically stalled. The Zillow Property Value Index has been flat all year. It's actually the second slowest pace since early 2018. And homes are sitting longer. I think it's up to 27 days on market now, which is 1 day longer than pre-pandemic and a full week more than last year. So even if things feel slow, there's still little pockets of buyer activity here and there at the end of summer.
If I remember this right, Zillow had, a 7.3% drop in new listings from July to August. That's a sharper drop than usual for this time of year. And, with homeowners seeing something like a 46% value growth since 2020, they're thinking, why rush? Plus, about a third of folks who did sell said job changes were the reason. With the job market getting shakier, maybe even less are going to move soon.
Right? But it's not the same story everywhere. So look at places like Miami, Tampa, and Austin. During the pandemic, they were on fire. Now they're way more buyer friendly. You're seeing inventory rise, sellers being a bit more flexible on price. I mean, Seattle, get this, Seattle's inventory is up 22% year over year.
That's wild. I always thought Seattle would stay competitive with all the tech jobs, but things are definitely shifting. Meanwhile, places like the Bay Area and the Northeast, Boston, New York, they're still tough if you're a buyer. Inventory didn't really come back there, did it?
Nope, still tight. If you're hunting in those spots, competition is pretty fierce. And I wonder, Ruby, with all the layoffs we saw in tech, especially in hubs like Seattle and Austin, do you think we could see sudden shifts in inventory? Maybe more homes hitting the market if folks need to relocate?
Could be. Sometimes with layoffs, you get a bunch of listings, then everything gets snatched up, then nothing again for weeks. It's a bit like musical chairs, but with condos, and then you've got Buffalo and New Orleans, super random, but they were the only big metros where values actually went up in August. Like, what's happening down there that everyone else missed?
Yeah, really. Regional trends are getting weirder by the month. Even with some places getting more listings, total inventory nationwide is still 22% below pre-pandemic levels. So, it's not a buyer's market everywhere. Just got to look carefully.
Exactly. And as we touched on in that episode about seasonal buying, the perfect week episode, this is why tracking local patterns, not just national headlines, makes all the difference right now.
All right. So for buyers who are listening, here's where the numbers stand. Typical US home value, $363,946. Median mortgage payment with 20% down is about $1,855. Nearly 29% of homes are still selling above asking, but that's down from last year. And this is big. The median age of inventory has climbed to 66 days now.
So there's a real opportunity if you're actually active in the market. Less competition means more negotiation power. You can spot deals that just weren't there a year ago. But it also means you probably want to move fast if you find something you like, because if things tip back, the window can slam shut on bargains real quick.
Absolutely. I had a client down in Miami last month. Inventory was running just a bit ahead of demand, and they got $20,000 off the asking price on a townhouse. 6 months ago, no way that would have happened. If you're prepared, financing lined up, know what you want. You can move decisively and maybe get terms you wouldn't dream of last year.
Yeah, that's the trick. Everyone's talking about market resilience, but honestly, you need patience and flexibility. It's not the wild competitive free-for-all it was in 2022, but home ownership is still totally doable. Just, expect a longer search and maybe some awkward negotiations with sellers who aren't sure if they even want to move.
And don't forget, these windows where buyers have more leverage rarely last forever. Once the market finds its new rhythm, sellers could come back and flip things around. So be ready, be reasonable, and, well, Ruby, anything you want to add before we wrap up?
Only that I can't wait to see how the next few months play out. I've got my popcorn ready. Thanks for tuning in today. If you missed last week's discussion on timing your mortgage, scroll back in your feed. Lior, this was a good one.
Always a pleasure, Ruby. Good luck out there, everyone, buyers and sellers both. We'll see you on the next episode.
Catch you all soon. Bye.